Yeah.
But brother, I'm going to turn us around a little bit.
Okay.
I'm going to have my folks start asking you questions, and they'll when they have a question, just to they'll introduce themselves.
Yeah.
I know, so you are. So maybe we can start. Maybe we can start with Melissa and asking a question.
Thanks for putting me on the spot there, Corbin.
Nice to meet you.
Nice to meet you. My name's Melissa. I spoke with you last time.
Okay.
About Bitcoins, I believe.
Yeah. Yeah, I remember the Bitcoin conversation.
Mm-hmm.
I think since then Bitcoin has gone up even more.
I guess I would like to, for me, I'm kind of interested in learning more about dividends today because I do have a stock now that pays dividends, and so I've been watching it rise, but I don't.
Which stocks did you buy that pay out a dividend?
I have a Speedway stock, I think.
Yeah, Marathon.
Marathon, yeah.
It's called Speedway?
Or it's Marathon.
Well, no, it's Marathon, and they have I guess you call it Speedway gas stations, whatever.
Mm-hmm.
Okay.
But it's Marathon.
So gas stations, pretty much.
Yeah.
Yes.
Yeah, that's my first stock.
Now they do some also. They also do some what do they call it? Gas exploration type stuff as well.
Okay.
Gas and oil.
Gotcha.
Yeah, so I was just, just interested in how all that works and stuff, dividends, and because I'm watching the stock grow.
Yeah.
I've seen it grow, and that's exciting for me.
So when thinking about dividends, you always want to keep those two separate, because especially when I talk to people, I'm not saying that you're a beginner, but when I talk to somebody who's like new to dividend investing, mm-hmm. It's hard to separate the dividend from the growth of the stock. Like you can see the stock go up and down, but always keep those two separate. So the value of the stock can go up and down. Hopefully over a long period of time, the trend will be an upward trend. But then the dividend is something separate. The dividend is separate from the value of the stock, even though those two might influence each other. Right. Usually in the US, dividends get paid quarterly, so every 3 months. But there are companies that pay a monthly dividend. I even have one that pays twice a year, and there's some that pay only like once a year. But in the US, it's usually quarterly. Depending on which company you invest in, some dividend-paying companies, they grow their dividend. So the leaders of the company, the board members, they come together and they discuss if they want to increase or even potentially decrease the price of the dividend that they pay out to their shareholders. The dividend comes out of the net income of the company, which is the earnings of the company. So a company makes, I like using Coca-Cola. Coca-Cola makes billions of dollars in sales, but then they also have expenses. And then the bottom line, what they're left with is their net income. They take their net income, and a portion of that net income is paid out as a dividend to the shareholders. And of course, depending on how many shares there are on the stock market, you want to take whatever they're paying divided by those shares, and that's what you will get when you own those shares, if that makes sense.
Yeah.
Okay. No?
Yeah, so there's a possibility that a company can increase their dividends?
Yes. Now, here's the thing. I like to do fundamental analysis. So fundamental analysis means that you will actually look at the books of the company and look at their numbers. And I like to invest in companies that have been able to grow their dividend year over year. And I like to look at the past performance of a company. So I like to look at least 10 years to see like, okay, has this company been able to grow their dividends year over year? In the past, I used to do it literally by pulling up an Excel file and like, plugging in the numbers. But nowadays I use a website, Guru Focus. I just go to that website, I type in the ticker symbol, and I go to the dividend tab, and I quickly check to see what their dividend growth rate looks like. That gives me a quick understanding of like how the company has been performing from a dividend standpoint in the previous years. Now, past performance is not an indication of future performance, but that's what I do go off of. I do go off of past performance, especially if I look at companies that have some type of competitive advantage, and they have, when you look at where they are in compared to the competition, they might be the leaders in their industry. So I do look at a couple of things which will give me a lot more confidence in investing in a company.
So what was the name of that website you'd mentioned?
That's what I was going to ask.
GuruFocus.com. So I just use, I don't pay for information. So if you go to that website, you can sign up, you can sign in, which is what I've done. But there is a membership component to the website. I don't do that. I just use the free version. So if you go to the website, GuruFocus.com, you just type in the ticker symbol, a drop down will pull up. And then I always go to the dividend section. I also go to the 30-year financials, but I go to the dividend section. And if you go there, you'll see some cool graphs that I look at, depending on like the dividend history of the company, their net income, the dividend growth rate. You can see a couple of different metrics that most investors would look at. Everybody's a little bit different, but you get some of the metrics that a lot of investors look at, and it's a graphical chart. So you don't necessarily have to look at numbers. You can look at a chart. Some people like looking at charts a lot more than just looking at numbers. Mm-hmm. And also the dividend payout ratio. You see a couple of different charts that are helpful.
Does a possibility ever exist that a company would just say, we ain't paying out a dividend anymore?
Definitely. I mean, look at what happened in 2008 with the market crash, and look at what happened because of COVID. Disney stopped paying a dividend. The company that you mentioned also, Corbin, was it Ford?
Yes.
Ford stopped paying a dividend.
Yeah, they did.
Usually, if a company is in like a financial hardship, they might cut their dividend, or they might even stop paying a dividend. I try to stay away from those companies. That's why I like to look at the past performance of a company when it comes to how they were paying out the dividends, especially in moments of economic turmoil, like a 2008. Like I go back to 2008 and look at, okay, did the company pay out a dividend? Did they increase the dividend, or did they even like stop paying a dividend? So a company like GE, for example, that's a company from, if you look at their dividend history, it's like all over the place. Whenever something's going on nationally or worldwide, economically, GE always has a hard time like paying out a dividend. So that's like a company that I try to avoid. Even though I'm looking over here and I see my fridge, it's a GE fridge, which is kind of interesting. But yeah, definitely like I look at how companies perform during like economic turmoils and disasters. And I want to see like, okay, were they able to keep paying an increasing dividend? Disney kind of surprised me because I had high hopes for Disney, but because they stopped paying a dividend, I actually sold all my Disney stocks. But on average, all the companies that I invest, I only had to sell one company which was Disney, but all the other companies that I had, they still paid an increasing dividend, even during when COVID happened in like mid-March, when it got real heavy.
What's the advantage, if any, for a company to pay a dividend?
So I look at it as the investors. The company is pretty much, if a shareholder invests in a company, the company wants to. It's a thank you to the shareholders. So you, as an investor, you believe in the company, and in turn, the company pays out a dividend. But here's the cool thing. Well, depending on how you look at it, a lot of people and upper managers, they also work at a company. And if they perform well, so for example, take Pepsi. I don't know who the CEO of Pepsi is now because it used to be Indra, the lady from India, but she retired. But the CEOs of the company and even upper management, they own shares in the company. So it's in their benefit that the company also does well. So if a company is able to increase production, increase performance, pay out a higher dividend, that also filters down to them. So there's two ways of looking at it. It's looking at it from a shareholder standpoint, like when a company went through an initial public offering, the company gathered a lot of cash flow money in order to fund their business. In turn, they thank the shareholders by paying out a dividend, but then also from a CEO and upper management level, meaning that if the company performs well and they get like a package of shares, if the company performs well, it also benefits them.
You know, brother, one of your books, you put out several, obviously, as you know, but the one I absolutely love, the first one I read was Smart Investors Keep It Simple.
Yeah, that's my favorite.
Subtitle, Creating Passive Income with Dividend Stocks. I got several questions. The first one is, what is passive income?
So passive income, so you have earned income and you have a couple of different ways of looking at it, but just to earned income and passive income. Earned income is income that you literally have to work for. So let's say you work in a grocery store, you have to do physical labor in order to earn your income. Passive income is income that you generate, but you don't necessarily have to work for it. So for example, you do the hard work up front, and once the hard work is done, you get paid passively. Meaning that, think about it like dividend paying stocks. You do the hard work up front by analyzing a company, buying the shares, and then you make money passively. Like you don't have to physically do anything because the dividends every quarter, they get deposited into your brokerage account. Another example with my books. So I make royalties with my books. So I put the hard work up. I put up the hard work on the front end by writing the book, editing it, proofreading it, coming up with a cover design. And then once I publish it, it makes me money passively. I don't have to physically do anything. So I can actually do a job. I can do whatever I want. And then on a daily basis, I just log into my different accounts and I check to see how many books I've sold. So earned income. Mm-hmm.
And you know what fascinates me about passive income, that's really something that you can create for yourself at any age. Would you agree with that?
Yes, definitely. As long as you have some type of knowledge or skill, you can leverage that and try to put it in a format that will make you passive income. So if you think about passive income, dividend stocks, real estate in the form of income properties, royalties, book sales. Even think about musicians, rappers, R&B singers, pop stars. They make their music, but then they make passive income from their music. So they might have MP3 sales, CD sales, Spotify downloads. So there's a couple of different ways that you can make passive income.
Mm-hmm. You know, right here in our group, we have a young man, Stephen, and, you know, he's a teenager.
Yep.
And I'm thinking, you know, it's like, wow, you know, if Stephen really studied, you know, he does a lot of reading on the stock market and dividend companies. And then let's say he's able, maybe through his family, to say, hey, let's put our money into these companies that are paying dividends. You know, a few years down the road, 5, 6, maybe 10 years down the road, but a few years down the road, he could actually be having income from that.
Yes. I mean, with dividends, you'll get income somewhat immediately. So whenever you hit that that pay date, you'll get that money, that dividend deposited in your broker's account. Depending on how many shares you own, you just want to times that times if you own 10 shares in Coke and Coke pays a 20 cent per quarter in dividend, just take that 20 cents times 10, which is a $2 dividend that you would get deposited in your brokerage account, which is passive income. And depending on what type of account you have it in, you can literally take that $2 and go do something with it. Maybe you want to buy something at McDonald's, or you want to buy a Coke, or you want to buy new underwear. You can do that.
Or have it reinvested in as far as buying more stock.
You can have it reinvested to buy more of the same shares, or you can just reinvest. You can pull it and reinvest it into buying other dividend-paying companies. So you can grow your investment portfolio with and have different companies in your portfolio.
You know, brother, I remember, this is how old I am. I remember when McDonald's sort of hit, and my grandmother, I kept asking my grandmother to take me to McDonald's. She took me to McDonald's, and she said, "This is the lousiest hamburger I've ever eaten in my life."
Yeah, that's funny.
But I said, so I say to myself, but if Grandma had sort of looked beyond the taste of that hamburger and said, "Hey, let's buy some shares,"
yeah,
just imagine where I would be financially just from that one share. And that it was because they're a dividend-paying company, and they just reinvest in that dividend. Just could have kept growing and growing and growing. It wouldn't have mattered if I'd never ate at another McDonald's in my life.
Exactly. And some companies also do a stock split. I'm not sure if McDonald's has done one recently or in the past, but there are also companies that go through like a 2-for-1 stock split. So you're in 2-for-1 stock split, your one share gets divided up into 2 shares. So you have the dividend reinvestments that you can do. And with reinvesting the dividend, you're buying a portion of the share if you reinvest it. But then with a stock split, you literally have another share. It is calculated, and is at the point of the split, you're not up or down any money. It's literally just split in 2, but the value is still the same if you put those 2 together. It's like if you have a pizza and the pizza has 8 slices, but then you, instead of 8 slices, you slice it in like 16 pieces, but you still have the same value. But after the stock split, that's when everything changes, because the stock market never stays the same, so it can go up, down. So after the stock split, the value is probably going to change.
Mm-hmm. Did you have a question, brother?
I just wanted to ask you about cryptocurrency and like the future of it. What do you think about it?
So with crypto, I stay in my comfort zone, in my area where I'm the most comfortable, which is dividend investing. So when it comes to crypto, I actually don't pay a lot of attention to crypto, even though I see the price keeps going up and up. One thing though, back in 2017, I did buy Litecoin. I think I bought like $500 in Litecoin, and I've just held on to it. It has gone up. I think it's doubled. But when it comes to Bitcoin, for me, I haven't done the research on it, and I don't know how to value Bitcoin. Like when it comes to dividend investing, I know how to analyze a company. But with Bitcoin, I would have to figure out how can you analyze Bitcoin, because right now it's based on speculation. Right. Somebody hears that, okay, Bitcoin is going up, and now everybody jumps on Bitcoin and they start bidding everything up. Or they might hear that Tesla is accepting Bitcoin now, or Apple is doing something with Bitcoin, and that pushes up the price. But that to me is still speculation. If I had to speculate though, I can definitely see the Bitcoin price going up even past 100,000, but that's speculation. I'm not good at speculating. I would rather look backwards than forwards, because with speculation, like it's like up in the air. But I can see Bitcoin going up even more as it gets more mainstream. It's already mainstream, but as it gets more integrated into our life and into our payment processors, I can definitely see the price of Bitcoin going up a lot more.
You just
That doesn't mean that doesn't mean buy it now. You would still have to do your research on when's the right time to buy.
Right. Melissa?
Yeah, so I have a question about, as I said before, I'm new to investing. I just have the one stock, and for me, because I didn't know a lot about it, I was given like the option. I was gifted a stock, so I was given an option of you could have this one or this one. So
Gotcha.
I then went and looked at the ticker and seen, looked at information, tried to make sense of stuff I really didn't understand. But the thing that I did know is that I wanted it to pay a dividend. And
Gotcha.
so, like, for me, like I said, I didn't really know anything, but I knew that it made sense that I would want something that's going to pay me periodically.
Yeah.
As well as raise in value, possibly.
Yep.
So I guess my question is why would anyone invest? What's the benefits in investing when there is no dividend?
Like I forgot his name. Like he just asked me about Bitcoin. Dividend investing is a slow process, right? When you look at a dividend, the stock that you buy is an asset. That asset has the potential to go up and down in value. But a benefit of that asset is that it also pays a dividend. So on a quarterly basis, you get paid money. Now, the thing about dividend paying stocks is usually they don't go up in value that quickly compared to a stock that doesn't pay a dividend. A stock that doesn't pay a dividend, think about your Twitters, your Facebooks, and what else? Tesla. Those stocks, from a growth perspective, the value of the stock can increase tremendously. Tesla grew by 800%, I think, last year, and they did a 5-to-1 split. So a lot of people don't like the slow process of a dividend stock because the dividend, the value doesn't increase that fast because it's usually a company that's a blue chip company, a company that's been like a Walmart. That company, the value of the stock itself doesn't increase as fast as a tech stock, but they do pay a dividend, of course. Most people want fast riches. They want to make money quick. So they want to buy low, sell high. That's the mentality and the mindset of most people. That's why people neglect dividend paying stocks and they go for the growth stocks, the stocks that have the potential to go up in value fast, especially younger people. And especially if you jump on YouTube and you do some research on investing, you will see a lot of advertisements for Forex trading, options trading, things that, and like methods of investing that have the potential to make you money fast, but it also has the potential to make you lose money fast. But that's the thing that triggers people. They want to make money fast. And you can do that, but of course you can lose a lot of money, but you can do that faster with a growth stock, if that makes sense.
Yeah.
Because that's the mindset of people when they invest, right? They think buy low, sell high. That's the first thing that people think about when it comes to investing.
Right.
You know that there's that guy on Shark Tank, Kevin O'Leary,
yep.
Yeah.
I think
he's got a couple of videos out.
He's a dividend investor also, right?
Exactly, yeah.
I think I've seen a couple of videos of him where he was pretty much preaching dividend investing, like instead of playing the stock market game, actually buy companies that are worth something. Yeah. Because even if you think about like, I don't play the stock market game and I don't follow what happens on the news because I value companies. I look at companies, what they're selling, how much money they're making. And based on some of those metrics, that's when I invest in companies. But think about a company like GameStop. The company itself is not worth GameStop. The company itself is not worth that much because all the young people are buying their games online. So having a store where you have to buy physical copies of a game, that market or that method of buying games, it's dying down. But there has been manipulation and the GameStop price of the stock went sky high. And a lot of people made money, a lot of people lost money. But that's, like I said, going back to the mindset, people like to buy low, sell high.
So would you categorize yourself more as a value investor? Is that what that is?
Yes, a value investor. There are different names for it, but a value investor, I just look at myself as somebody who buys companies.
Mm-hmm. Yeah,
because
the reason why
there's a difference between like playing the stock market game and then actually buying companies. Because if you play the stock market game, you'll always look at the price of a stock and try to decide, okay, when's the right time to buy, when's the right time to sell, which might go into like day trading or even swing trading. But I like to look, even though I still use some of those methods that day traders use when I buy my stocks, but I focus more on, I get away from the news and I look at what companies are actually doing. What are the products that they're selling? Are these products that they're going to be able to sell 10 years from now, 20 years from now? And then what's the revenue looking like? What's their net income, their profit margin, the dividend that they pay out, the dividend payout ratio? So I try to stay away from playing the stock market and just jumping on hot tips that you see on the news.
Yeah.
How long you been investing? When did you get started? At what age?
So when I came to the US, I came to the US in 2005, and I didn't know anything about investing. So I went to the library, started reading books about personal finance. And those personal finance books always had a chapter on investing. So that's when I kind of started getting into investing. I didn't see the potential of investing until I started investing back in, I think 2006-ish, 2006. And the first company that I worked at, I took a little bit of my money and I invested in the 401k. Now, I just left it. I didn't pay too much attention to it. But 5 years down the road, I think I logged back into my account. So I started investing in 2006. And then in 2011, I logged back into my account. And I noticed that the stocks that I bought, this was an index fund, it increased in value. Now, it didn't increase in value a lot because I did not invest that much, but I did see the value increase. And that's when the dots connected for me, because I'm like, okay, this is interesting, because something that I did 5 years ago, I can look at it now and I can see that the value increased. So there's one thing if somebody talks about it and they tell you, yeah, you have to invest because you can build wealth, etc. But it's another thing to actually see your wealth grow. And that's when it like really clicked for me. I'm like, this is interesting. Something that I did 5 years ago and it's worth more.
Now, was there any other, you have family members who are investors too?
So back in like 2005, 2006, my dad was investing, but he got scammed by a pump and dump method that was being used. And he told everybody that he met, like, never invest. Investing is a scam. He told my brother, never invest in the stock market. It's a scam. He never told me that. And I was in the US. Like, I was just like literally in the US that year. And I always asked him, like, why did you not tell me? Like, you told everybody else. Why did you not tell me? He told me, like, he already thought that I was not going to do it. But once I started doing it, investing, and I showed him the benefit of like how I invest, not saying that how I invest is the best way to invest, I got him back into investing, and also my brother. So when I say investing, it's not necessarily just, okay, invest just for the heck of it. It's about investing for your future. So you don't have to be 70 years old still working at a company. Mm-hmm. It's about building wealth. It's about building wealth that you can pass down to your next of kin. That's the goal, the end goal. Okay. It's about building wealth.
So will you be invested in the stocks your entire life, or will you eventually get out when you retire?
So like I said, if you think about investing, I don't play the stock market game.
Right.
Think about it like I buy companies. So when you buy Tesla stock, you're buying a piece of Tesla. Now, Tesla doesn't pay a dividend, but here's the thing. The companies that I invest in, for example, a Coca-Cola, a Pepsi, those pay an increasing dividend. The cool thing about investing in dividends, even if you're young, is that you can get it up to a point where you can literally just live off the dividend payments. I did my taxes back in 2018 when I went to H&R Block. When I talked to the lady that was doing my taxes, she saw that I had dividend income. And she told me a story about like an older gentleman that came in, and he wasn't working. He was probably in his 70s. And he was making $70,000 or $80,000 in dividend income. So he can literally live off the dividend income without having to sell the assets.
Right.
Not only can he live off the dividend income, those companies that he invested in, they increase their dividend income on a yearly basis. So your money, his 80K, next year is probably worth 85K. So his money is also keeping up with inflation. So you don't even have to sell those shares. You can just keep holding on to him and then live off the dividend income. But it does take a long time to get there, though, where you can just like literally live off the dividend income. But that's the switch that you have to make when you think about dividend income. Because like I said, people usually think about, I want to buy stock. I want to buy Tesla stock. I want to buy it today and then sell it tomorrow for like 100% profit. But with dividend income, it's a little bit more of a change in the way you look at things. It's about the dividend income that you get. And I look at it always like the dividend income, that's the money that I get for the research that I've done. And that's the money that I want to live off of. Like, if you work at a job, the job pays you a salary. My dividend income, that's my salary.
Yeah. All right. Brother, we're going to end it here. Man,
Awesome.
I always love it, man.
Awesome question. Good questions.
Yeah, I got some good folks here. And
yep.
man, of course, we'll keep in touch. Hopefully we can do this again sometime.
Yep. You did get my books, right? Those two?
Yes, I did.
Awesome.
And got one brother. I don't think he was able to make it today, but one brother bought one. I got one copy left.
Okay.
But $10. So I might have another sale as soon as Steven stops eating long enough to pull out his money.
And definitely go to the YouTube channel also. It's free on the YouTube channel. The information is free on the YouTube channel. Yeah. How is your podcast doing?
It's doing well, man. People are now beginning to respond, but
nice.
You know what they're really responding a lot to? I've done 2 interviews with some guys on cryptocurrency.
Awesome. I got to check that out. Did you create a YouTube video on that, or is it just?
Yes. Well, no, I haven't created a YouTube video on it yet, but okay. I hope to. I hope to do it soon.
Gotcha.
But yeah, I'm not there technologically, but man, I got to hire people to do all this stuff for me. They want to know your YouTube channel address.
Excuse me. Just my name. I'll email it to. So you have one of the books on the table. The name of the author name, my name, that's my YouTube channel. So just type in my name in YouTube, you'll get to my channel.
Okay. Yeah, and I want to encourage.
Just sort by most watched videos, and then you'll see the best ones. Okay,
good. Yeah, I strongly encourage people to do that. I do listen to your audio books.
Yeah, because even like it's like I also get paid in advertising, so it's not like it's for free, right? So definitely just go to the YouTube. I'm still like making a little bit of money off of it. So
great, fantastic.